Happy Mortgage Monday, and welcome to the Wake Up Real Estate Show, December 5th, 2023. We're going to briefly chat about DSCR loan programs. I think Ryan's got a social post of the day. And then I also want to share a couple of little updates on some of the marketing topics that we had been sharing last week. Ryan, what do we got for on the social
Yeah,
post front this
yeah,
morning?
because it's Mortgage Monday. It's just a mortgage rates update. There's our favorite site there, Mortgage News Daily, actually has a shareable kind of graph thing on their site. Where was that? Oh, I lost it. But they have this little shareable widget, so I just grabbed a screenshot of that today. But they're down, Jordan. They're down like 1% in the last month, or 0.9.
Yeah,
They're
I mean
down
they're
a lot.
down. Yeah, they're quite a bit.
Yeah, so we should just be talking about that and letting people know that now is a good time to pull the trigger if they're thinking about it, because you don't know if they're going to keep dipping like this. That they probably won't keep dipping like this aggressively. So if they're on the fence, now's a good time. And then I linked to our Start the Mortgage Process page, which you guys all have access to from the Wake Up site, from the lead generation tools section. So you have your own version of this page that you can use if you want, and that'll send a lead over to our mortgage team, and Jordan and team will follow up quickly.
So if you haven't already done so, you should go to wakeup.realestate, create a free account, and that's one of the many free resources that you get. We've got lead capture pages, other lead capture tools. We document all of the scripts and templates, which, by the way, last week's Texting Tuesday script continues to work incredibly well. We have generated a ton of appointments and mortgage applications. And in fact, I was group texting with one of those this morning, right before we went on, someone who the down payment assistance concept got her attention, and we're going to be working. She's doing an application now. We'll probably review that application this afternoon and either get her a pre-approval or get her a plan so that she can get that pre-approval and get out and start shopping homes. All right. So good stuff on the social post of the day, which, by the way, those are also documented at wakeup.realestate, or you can just go to Ryan's personal profile and just swipe and deploy them from there as well. I want to get right into. I want to keep this short and sweet, in part because Jordan is he's fighting the good fight this morning. He's fighting off COVID, so he's not 100%. Right, he's playing hurt, which we appreciate, and also because we're going to do a deeper dive tomorrow afternoon on this topic. But I want to at least whet your palate to the idea of DSCR loan programs. Some of you may be aware of those. Maybe some of you have even used one or have clients that have used one to purchase a rental property or even refinance a rental property. Some of you may have heard the acronym and have some idea. Some of you have no idea what we're talking about. And all of that is fine because this is about just kind of opening your eyes, get that reticular activating system going so you can maybe find some opportunities in your market and play the role of transaction engineer and put some deals together, put some deals in your pipeline this winter, maybe even get something done here before the end of the year. There's still time. It's getting short, but there's still time. So Jordan, what does DSCR stand for? Let's start there.
Debt service coverage ratio. Essentially, in essence, it's a self-employment product, right? It's a product for investors that allows them to buy properties based off the property's projected rents more than, and it's not based off their personal scenario. It's based off of what that rent would be. So, for example, let's say we have a single-family residence that is someone's buying for $500,000, and that payment's $2,500, $3,000. Let's just say $3,000. As long as the projected rents cover that $3,000, so an appraiser fills out what is called a 1007, okay, a 1007 form, and it basically will say, hey, this is how much this property will rent for, based off the market. And
it's kind of like a rental appraisal. Yeah.
And as long as it's a 1-to-1 ratio, 90% of companies good. Not that it can't be lower than a 1. There are products out there that will even go lower, less than a 1, or even 0. Right? It doesn't have to have any ratio at all. Those just require higher down payments. Those require higher credit scores, things like that. And the exact opposite, works as well. So where you'll actually get better rates, better credit for a higher DSCR ratio. So if someone's coming in and putting 50% down on a property, that DSCR ratio is going to be obviously higher. There's going to be more profit there. You'll actually get a little bit better on rate and better terms.
The other way to get that, besides putting more down, is finding a better deal.
Yes.
Right. So if you get a better deal, if you either negotiate a better deal or find a better deal or create a better spread between what it will rent for and what the debt service will cost, you can get better terms. So from an investor perspective, it means you can purchase or refinance an investment property without having to qualify on your own personal income or employment. Now, your credit is considered, and you need to have assets of some kind, either equity from another property that we could take and leverage, or cash on hand, right? So you still need down payment. But for many folks, documenting income can be problematic, especially if you're if you're self-employed or a business owner and you're maximizing your deductions, etc. Sometimes that can create a problem. It's a smart strategy, right, to keep more cash on hand, but from a lending or financing perspective, can be problematic depending on certain scenarios. So this is a workaround and a great opportunity for you if you're listening, right? Because most of you listening might fit that box, right? Where you're trying to maximize your deductions and keep more money in your pocket, right?
You're also seeing the deals from day to day, properties that will work with this program. That's how I ended up with mine. I did a DSCR a few years ago. I just saw one that was perfect. I wasn't thinking about picking one up, but it was just, you see the property, you're like, how can I finance this? And the DSCR was there. Yeah.
And this is one of the reasons why we wanted to bubble this program back to the surface, because this time of year there can be a slowdown.
Yeah.
And properties, for example, there was a property that I had clients that had put an offer and we lost out. And the buyer backed out, came back on market. We resubmitted an offer last week. The seller said, no, thank you. Didn't even counter. It's a week later. They still don't have any other offers. So at some point, their motivation may change, and we may be able to get a deal that if it were the spring or early summer, it probably wouldn't exist. So it is very timely. Again, whether you're looking for a deal, your first or next investment property, or you want to play transaction engineer, go into your MLS this afternoon and spend an hour just looking at properties and try to find a good deal. And if you want some help with the numbers, Brian, what's that calculator that you've shared a couple of times on here?
Calculator.net. I'll get the link here.
So you can there are tools online that you can, tools online that you can use to get a rough estimate. Or I've got access to a platform where I can punch in the numbers and it'll spit out the breakdown and the cash on cash return, the projected cash flow, etc. And I'd be happy to explore those with you. And then, when you find a good deal, either A, you can jump on it, or B, you can present that to your database or to your social media as something to consider, right? If you've been thinking about buying your first or next investment property, here's a deal that you might want to consider, and just kind of tease it out and start generating some conversations around that idea. Jordan, I feel like you're itching to add something.
No, I'm
Okay.
just breathing. I'm just breathing. Yeah, that's all that's happening. Is I'm focusing on breathing right.
Sorry. Yeah, Jordan. Again, if you're joining in late, Jordan's playing hurt. He's fighting.
I'm good.
COVID.
Yeah,
and
no,
the rustling.
The only
the
thing
rustling that you heard was him getting a cough drop. Just in case you were wondering.
The only thing I would add is that this is a really good strategy for investors to do the BRRRR strategy, right? So that I talk about that a lot with investors. Is because a lot of these don't have seasoning, where traditional products will have seasoning.
For the uninitiated, because we're using another acronym here, I think it's a pretty popular acronym. But if folks they're not familiar with the BRRRR method, what is the BRRRR method, or what's that acronym for?
Basically, it's where you buy a property cash, renovate the property. Either you're going to fix it and hold it, right, or cash the money out, pull all the equity out at a higher appraised value, or sell or fix and flip it, right? Flipping the property. Both are money makers, right? At the end of the day, but essentially taking it to where I'll give you an example of one I did do recently in Kansas City with a past client. We had he had a property. He bought it for $75,000. Okay, he got a steal on it. He called off the water shutoff list and put it under contract. He was going to flip it as a wholesale deal. He was just going to wholesale it to another investor. But he decided that to check out his options, and we actually were able to cash out him $120,000 without touching the property at all. So he ended up pulling more money out than he put in. So he has actually more money. And then the rents were already covering that mortgage payment. He got a steal on it. So he ended up renting it out and essentially having, another $30,000, $40,000 to play with at that point. But that would be an example of, a BRRRR strategy. That you're not able to do that on conventional and FHA loans, because there's a 12-month seasoning. Basically, you have to own that home for 12 months. Where on these DSCR products, there are a lot of lenders that will waive seasoning requirements because they understand that's exactly what you're trying to do. Is you're trying to invest in property, pull more equity out, fix it up, or do whatever to make it worth more value, and then pull it out. At least replace your money to where you can go buy the next one, or turn around and
So low thank you. Buy, rehab, or renovate, rent, refi, repeat. Buy, rehab, or renovate, or rehab and renovate if you want to really add a bunch of R's. Rent, refi, and then repeat, right? Rinse and repeat. We could even add rinse and repeat. Ryan, you got the investment calculator there on I can't read that. Is it calculator.net, right?
Yeah,
calculator.net and investment calculator.
Google calculator.net investment calculator. It pops up. It's so easy to use. I've done videos of this. I think we've done it on the show, where you do a video of the analysis, you post it to socials. You can email it out to your list. And I don't know, for my money, you just find something that would be a really good buy and hold, probably in most markets a 3.2 or 3.1 that the rental market would be interested in, and you figure out at what number the numbers make sense. But a DSCR, is it at 1% of the rent, Jordan?
Traditionally, 1%.
Yeah.
So 1%, 1-to-1 ratio, not 1%, 1-to-1 ratio. So
but once again,
$1,500.
Yeah, right. It wouldn't be ideal, but we do have lenders that offer 0.65, 0.75, no ratio. Some it's higher, but you get better terms. Some it's 1.1 to 1, 1.25 to 1, but you get better terms. So there are lots of options and programs available, which is one of the many, many benefits of chatting with Jordan or I. If you have someone exploring or interested in exploring these options, I've got the number scrolling on the bottom. If you text DSCR to 888-403-MORT, 888-403-MORT, or you can honestly text anything there, and someone on the team will follow up with you. And if this is a topic that you're interested in, you should definitely join us tomorrow afternoon at 1 Eastern. We're going to do a deeper dive. Hopefully Jordan's feeling a little bit better there, or I'll take a little bit more of the lead. We'll show you some of the programs and also get into some, like, look at some actual properties and break down some numbers there, just to get your gears turning there on what that would look like, or how that might work, and what the numbers, how you can quickly, ideally quickly determine, will this 1-to-1, right? Like, that's an easy 1-to-1's an easy sort of threshold, that if it fits that, there would be theoretically DSCR financing programs. Does it mean it's a great deal for every investor? Not necessarily, but at least it would pencil for DSCR theoretically. So a couple of questions here. Will you be sending an email as a reminder for tomorrow? Absolutely, 100% we will. We'll have our normal show, Texting Tuesday at 10:30 a.m. Eastern, and then we'll do the deep dive on the DSCR loan programs and products at 1 Eastern. Soledad asks, would a $1.4 million property be ideal for a DSCR loan? A buyer is interested in a property for rental purposes if the numbers pencil, right? It really is all about the numbers, right, Jordan? I mean, is that?
Yeah. I mean, yeah, they're, I mean, let me put it this way. There's not a situation that you don't want to do a DSCR if you're a self-employed person that is writing off their taxes properly. You'll end up spending more money and trying to qualify for a traditional loan in the long run. Usually, I'm not a tax professional and I don't know, and you should talk to your tax accountant. Don't talk to me about it. But I would say writing off your taxes every year would save you the money that you need. And then, DSCR loans are the only option at that point, right? So yes, I would say the answer is yes, but it also, again, it goes back to running the numbers, making sure it makes sense. That property might not make sense, not necessarily the DSCR loan itself.
Right.
Okay. And then go ahead.
Well, two follow-ups to that. One thing, we touched on it very briefly, and we'll do a deeper dive. But as far as the amount you need down for DSCR, there are some programs as low as 15%. Those are for experienced investors. Typically, that is rare. That is rare. 20 to 25% is more the norm. And we can, if you have someone who's interested, Jordan is wonderful at looking at, and we talked about it last week when we were talking about down payment assistance. Jordan is phenomenal at looking at the puzzle and figuring out how to make the pieces fit together. So there may be other assets that we could use for that 20 to 25% down. And after doing so, when you combine what Jordan just said, the tax benefits, et cetera, it can create a situation where it might increase cash flow or decrease tax liabilities, right? There's any number of things that go into that. Now, we're not accountants here. We're not tax attorneys. That's not our specialty. But the reality is there are a lot of tax benefits to owning rental or income real estate. Angel also asked, can you use a DSCR for a multifamily that will be owner occupied? Will approval be based on income generated from the secondary units and equity in the property? Is credit score a factor or only the asset?
The answer is no, but you can do a traditional loan. You could do a traditional loan. You could still, what you're asking to use, for the secondary unit, secondary units and so on and so forth. You could do that on a traditional conventional loan. Just to kind of give you an example, I don't know if you have that's a very specific question, so you might have a deal in mind.
Right.
But let's say on a conventional loans now, sellers can give gifts of equity. Okay, so someone could theoretically give a gift of equity for the equity that's in the property, right? You can negotiate that once the appraisal comes in. Gift of equity for the down payment, which the down payment would be on a first-time home buyer for a multi-unit. Conventional would be 3% down. And then you could use the other units at 75% of the rent as income. Doesn't mean that they're just going to waive it if it offsets it. It's not going to be a 1-to-1 ratio like DSCR, but you can use the other as income. So that is possible depending on how much income is being brought on in the units to possibly qualify for that property.
I'll tie it back to our topic last week, down payment assistance. You could also use an FHA if it were a 4-family, or actually, let me say this. The loan limit increases based upon the number of units. So a 2-unit, the loan limit on FHA is more than on a single unit. On a 3-unit, it is more than on a 2-unit. On a 4-unit, it is more than on a 3-unit. And so that could be an option as well to explore, Giselle, because that in that scenario, you could theoretically use FHA, use down payment assistance, and you could put them in a property with little out of pocket. And if the numbers pencil, maybe the tenants pay for the property, and that's a wonderful strategy, especially for a first-time buyer to get started as a buyer and an investor all at once. Jordan, go ahead.
When I bought my first house, that's exactly what I did.
Yep.
There's no money out of pocket. Went in, got it, and the entire mortgage was covered by the other tenants.
I've never thought about this before, but I actually house hacked before it was cool, because my wife and I bought our first home in 2003, and the market was hot, and it was in a Philly suburbs where things were expensive, and it was this little Cape Cod house. And we rented out. It was a 3-bedroom Cape Cod, and we rented out 2 out of the other 3 bedrooms to guys we went to college with. And we could not have afforded the house if we hadn't done that. And lo and behold, 15 months later, we sold that thing for like $35,000 more than we bought it for. So it was a good way to get started. Buying real estate. That was our first purchase. I never really thought about that before, actually. I was ahead of the curve. We were ahead of the curve. My kids will never believe that, but nonetheless, we were house hacking before house hacking was a thing. Okay, Bob. Yeah, it was a long weekend. I saw your email. Ryan and I will get to that, and we'll get back to you this afternoon.
Yeah, I didn't see it, but I didn't check my email either. So we'll reply today.
Yeah. Okay. So some housekeeping items to wrap up. I did mention a little update on some topics that we talked about last week. One of the things I sort of mentioned as almost a throwaway later in the week, I can't remember if it was Thursday or Friday. I think it was Friday, because it was when I was talking about the Christmas lights post, that I was able to do a boosted post on my personal profile on Facebook.
Right.
And it is getting a lot of activity for very little investment. And so Ryan's making funny faces if you're listening to the audio version. So on Wednesday, on our mastermind on Wednesday, I'm going to do that again. Hopefully it works again. So I'll show that strategy, how I did that. We'll get into more of the tactical. I also on Wednesday I'm going to get into some of the stuff that I've been doing that's working really well right now. For example, the short form video content that I've been putting out that's getting me comments and people messaging. In fact, I had one over the weekend where I have basically someone a come help me buyer come out of that, and also on Wednesday there's one other strategy. It's escaping me, but you definitely want to join us for that. wakeup.realestate/mm. On tomorrow's Texting Tuesday, we've got a script around the topic for today and the topic for the deep dive, how you can maybe get some possible investors to raise their hand. And it'll be a text and email script that you can use, swipe and deploy this week. We'll do the deep dive on the DSCR topic and programs and products, et cetera, that are available in the afternoon. Just got a jam-packed week. Thursday, Tech Tip Thursday, we got Scott Pierce with listings to leads coming as well. And by the way, I don't know that we have a guest secured for Wednesday. So if you would like to be a guest for What's Working Now, or you know someone that has had some strategy that they may be using that's working really well right now, we'd love to have them on. You can send a message or you can use the chat widget at the bottom right at wakeup.realestate. We'd love to have them on. And if not, Ryan and I will find somebody to share some some good nuggets for us that we can all swipe and deploy in our business. So Jordan, thank you for playing hurt today, for jumping on and sharing some good stuff. Keep an eye out for your email in the morning. That'll have a link to our deep dive, as well as the Texting Tuesday session and some other good stuff as well. If you need anything, use the chat widget bottom right at wakeup.realestate, and let's all make it a wonderful and productive week.
See you guys.
See ya.